Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from the late Queen Elizabeth II, the UK's longest serving monarch, revered by so many who lived, and she lived a long and full life serving others, and sadly she passed away last week at age 96. As a sign of respect, I chose one of the Queen's quotes for tonight. There was such a long list of wise words to choose from, and I felt this one was fitting with what we share. Queen Elizabeth said, "It's all to do with the training. You can do a lot if you're properly trained." And she was right. So thank you, Queen Elizabeth, for all you've given, and may you rest in peace. The Queen's words apply to everything we do, and in these changing times, it's increasingly more important for investors to receive proper training before investing in the stock market. Tonight, Dale and I are going to shake things up with our upfront, no BS approach on all things stock market. For our main topic tonight, we're searching for the miners paying the juiciest dividends, and there are some healthy sums being handed out. So make sure you stick around to find out more about these cash payments. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you this evening?
Was the Queen 96?
Well, it's amazing, isn't it?
I thought she was like 92.
I was hoping she'd make the 100.
Well, she'd write herself a letter. It's
yeah.
like, hello, Queen, you're 100. Well done, Queen.
Do you think you'll live to 100? Didn't you tell me that you
Not
doctor
I hope.
said?
Only the good. Actually, I probably will because only the good die young.
Really?
Yeah.
Oh.
Something like that.
Oh,
I had a busy week last week.
You did?
Yeah, I was in this studio for a whole heap of time.
Have you been cleaning it lately? I wondered why it looks so clean.
I wasn't cleaning it. The boys did that, but I was just recording stuff for our CFD FX course and everything else, and then I was recording stuff for our new venture that we're going to probably tell everybody about next week. We've been keeping a secret.
Oh, fantastic. I'm
so we
looking
might have a
forward
super announcement next week.
being able to spill the beans.
Spill the beans. I know it's been tough not being able to spill the beans, isn't it? We've got to keep it sort of like Christmas presents that we're not allowed to tell anybody, but we've got a big announcement probably next week. But anyway, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I hope you do, and ask us a question that has been on your mind, then this is your opportunity to pick up your phone and call us now. We generally want to support you, so please show your support for us and the show. The number you need to call is 03 for Melbourne 92909988. That's 9290 9988. To get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. So pick up your phone right now and get dialing.
While we wait for you to call, it is the first Tuesday in the month, and that means we take a look at the Australian stock market sectors. So let's get into the charts.
Well, on your screen right now is actually the sectors within the Australian stock market, and it is the monthly. So, I'm on to you.
So no real surprises there, I think. Information technology is doing well at the top there. You can see is up 1.78%. Consumer discretionary, 1.27%, and materials is actually up slightly, 0.7%. So we've seen a bit of a rebound on the miners that were pulling back quite strongly, which is interesting. Financials are actually up 0.6%. Consumer staples up 0.34%. Now we know that the staples often do better in times of doom and gloom than consumer discretionary, but sometimes that shifts, and we've seen staples lag behind consumer discretionary. Healthcare is actually flat at the moment. Now, obviously, CSL's causing that.
2 weeks into the month, so it's more.
Yeah, you want to give it a go, don't you?
I'm just thinking like monthly. When you've got 2 weeks, it doesn't.
So why don't we look at this in the first 2 weeks then? You set the order.
Well,
should we change
I set the order. So
should we change this to the end of the month?
Well, we could change it to the end of the month, but then you've got the same problem with whatever else we look at, isn't it?
There's not much point you and I voting because you'll choose one way, that's just your nature, and I'll choose the other way.
But that's your nature.
We need a third person.
But it's just got to, to me, you've got to compare them on a quarterly basis or even the yearly basis, but more. But we may set up, how about we set up a watch list that says quarterly?
Okay,
what do you reckon?
Let's do that.
I can do that for you.
Be great.
I'll work it out.
All right. Industrials is actually lagging. Communication services also lagging. Then we've got energy and utilities, which are right down at the bottom there, but not too bad. It's not an issue really, is it?
Information technology being up a little bit this last few weeks doesn't really surprised me because it was so hard hit, during the pullback that we had into June. So, but it'd be interesting to see that as a comparison to like the yearly, where it is in the yearly, because I know energy was really up the top yearly, and that's still up the top.
Would you like me to change it for you?
Well, you can if you like, but I know you want to talk about consumer discretionary.
Well, yeah, we need to get into the charts at some point, don't we? So there's the yearly figures for you. So energy and utilities still up the top. Yep.
So you want to talk about a chart?
Yes, let's go and have a look at. I was talking about consumer staples and consumer discretionary, so I thought we'd go and have a look and see what's happening. Now, we're starting to see, I'll take this crosshair off, we're starting to see some support there for consumer discretionary off that low in September, which looks really nice so far this week, but obviously it needs to keep going for a couple of weeks to confirm that it's going up. Any move below this trough here in September, and we're more likely to see some downside.
That looks really, really good.
It does look nice, doesn't it, so far? So that's consumer discretionary. Now, I always like to watch what's going on in the info technology space, and we did previously look at this to see what the falls were like in the information technology sector, but we've seen overall it was a fall of 50%. Now, with everybody talking about a crash in the market, I mean...
That is crashed.
That is, it's already done it, hasn't it? So, is this the start of the rise? Well, it could be. It still hasn't proven it just yet, but it's looking much nicer. That's the actual monthly chart. We should go to a weekly chart and have a bit of a look. I'll better change it. Here we go. And you can see there, similar sort of thing to what we saw on the consumer discretionary. Now, when I see moves like this that are almost a replica across from one sector to another, this is what makes me think that our market is so much more contrived, because how can you get that happening when the sectors are two completely different sectors?
Correct.
With different metrics, and you're seeing the same sort of moves? Who's doing that?
Not me.
Okay.
But I'm sure I could have a really good guess at it.
I'm sure you could.
But, anyway. But if you do want to give Janine and I a call, we'd love to hear from you. Pick up your phone, ring 9290 9988. Remember, 9290 9988. Give us a call now.
That is it for our thoughts on the Australian stock market. Now it's time to get into our first email for the night.
Our first email question is from Jason, and Jason says, "Hi Dale and Janine, just listened to your first podcast and loved it. I've also enrolled and completing your diploma of share trading. Well done. It would be great if you reviewed the stock PBH on your next show and shared your thoughts. Kind regards, Jason." Isn't that nice? You listened to our podcast and decided to enroll in our course. It is very good for him. He's going to have a blinder of a time going through our diploma course.
Oh yeah, he's going to love that. Yeah. All right, so let's get into this chart. PointsBet Holdings Limited. Now, this is the gambling stock, is it?
I don't like it.
What is this? This is the gambling stock.
It's PointsBet.
Yeah. Okay. Now, I mean, it's gone all the way almost back down to its all-time low, so not great for anyone holding this share. In the last couple of weeks, it was sold off again to test this low here. I'm not too concerned about it right now from the point of view that we've got this bottom here. Provided it actually finds support and starts moving up soon, it could bounce off that low, but it's still too early to tell. So it really needs to start pushing back up above $3 to see that happening. Any move below last week's low and this low could be taken out.
This is one of those, what do you call them? Follow the leader type stocks, where everybody.
This would be a chat forum stock, wouldn't
it? Correct. That's what I meant. It's one of those ones that people love to follow everybody else into. It's sort of like the flavour of the month type stock, and it's come down heavily from a number of months, or even a couple of years. It's coming down. So people are now trying to get in and get a cheap buy, because I've heard a few people talking about it, but it looks CRAP to me.
Yeah, so it did really well during COVID, didn't it? And then it just fell all the way.
Unless people are thinking it's going to do exactly the same thing again, and that's what they look at past what it did in the past and go, well, it's going to do exactly that again, and I'm not seeing that.
Patterns don't repeat exactly the same.
No, and I'm not seeing it. I'm not seeing any too much strength there, so I'm not saying it's not going to go up, but I don't really like it.
All right, thank you for that, Dale. Before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Gillian. Hi, Dale and Janine. I've heard that investor advice for BHP is buy, hold and pray, and I expect the same goes for Rio. I've always regarded these as safe stocks, but wondering about the risk relative to China. Also, I'm particularly worried about FMG, which I also hold. And how do you see Fortescue performing in the long term? My holding is down 30%. I was planning to sell, but it may be...
I'm not planning to sell.
I'm not planning to sell, but maybe I should. That's
Maybe
right.
Should, yeah.
Sorry, this is a lot of questions regards Gillian. Thank you very much, Gillian, for your questions, and great to see a lady asking these questions. So
too many questions.
We better move on to the chart now, shall we?
Well, you got to answer the question. She's not asking about a chart.
But first of all, I just wanted to show the picture of what she's looking at. So she was talking about FMG at the end there.
Yeah, but the first question was about BHP and how they talk about buy, hold and pray, which I think is crap.
Yep.
That's a stupid saying.
Well, I think she was alluding to that she's...
Yeah, it is a stupid saying.
Understanding
like,
that's
don't
what's
listen
said.
to them. Please don't listen to everybody because it's buy, hold and pray.
Rio being the
and
same.
Rio, no.
They're trading stocks.
They're trading stocks. They're not a buy, hold and pray stock. I mean, if you 30 years ago or 40 years ago, if you put $10,000 into BHP 40 years ago, you'd be absolutely squillionaire by now.
Yeah.
You know, if you just held it. So I don't know why they say it's a prey stock. But
imagine that. I guess the praying would happen imagine your heart attack when you see the stock halving value. That's the sort of prey.
It's still a good stock.
Yeah.
So, but anyway, so that's my thoughts on that one. What was the next bit then? FMG.
Well, look, I mean, she was talking about the fact that it had fallen 30% from where she bought it. So it's down quite a way and it's fallen. It reversed last week. It's gone up a little bit more. I mean, we're going to be talking about this stock in the topic for tonight. So I thought I really wanted to share something with her, but I think we save it for the topic.
You're going to save it for then anyway. That's okay. But that's a good question. I think it's great she's asking those questions too. But, don't listen to most of the people out there. Listen to Janine.
Listen to you. You actually said the most tonight. Cool. You dominate.
Cool. Now, we haven't had a caller, Janine. Nobody wants to talk to us. Maybe it's me.
Oh, look, we can talk to ourselves and just
maybe
talk
if I
to the
wasn't on the
cows come
show
home.
that they would call you up and just have a chat with you. But anyway, if you do want to call us, 92909988. Now we've got a question from somebody who's called Tony, who says, hi, Janine and Dale. How do you handle gap downs? For example, CCX dropped 27%. At earnings, it unexpectedly dived through my stop loss. I've had other stocks gap down, followed by my stop loss plan, only to see price rebound in days. For example, BGA, 23rd of December, where I cut my loss and it subsequently bounced 20% for a better exit. I'm unsure whether to exit immediately at any loss, risk the price going lower, or wait for a potential 50% intraday bounce, or wait 1 to 3 trading days before exiting. Ultimately, I want to exit the position, however, mindful that short-term market manipulation is forcing me to sell at a loss with fear while they are buying my shares at a discount. I'd like very much to hear your advice. Cheers, Tony. My first thinking is he's buying the wrong stocks at the wrong time.
My
or
first
buying the right
thinking
stocks at the wrong time.
is don't think about the other side and what they're getting from this. Think about what you need to get from this first and foremost. That's the priority, isn't it?
Yeah, correct. I 100% agree. But generally when I hear people getting this sort of stuff happening, they've bought into the stock that's completely the wrong stock. It's like a liquid or low cap stock. Or they've bought a good stock when it's not even going up. It's in a bad position. It's already been going down. It's already trending down. They've tried to jump into it to get a cheap buy, and then it just turns and gaps right down on them, and that's where they're getting caught out. Because seriously, I rarely get caught out on that, and I know you don't.
Well, I mean, this is a dangerous stock to be in, isn't it? Look at it.
Well, look at it.
So it's in a massive decline already. So what do you need to be confident that it's going up? That's probably the point.
A lot more than probably that.
Yeah, and look, he's talking about it gapping down. So I would have felt for him in this situation because it's just plummeted from the close of this week, which was. And I'm not specifically talking about, he mentioned 27%, but I'm looking at the close on the 19th of August down to this low, and then it gapped down again and then fell all the way. So it's had such a huge fall all the way to this low. So 25 or 26% from that close to the close week ending 26th of August, and then from the close here to the bottom, another 16.6%. But it's recovered a lot of that so far, but still it's early days to know whether this has recovered because the problem is it's just made a new low. You have a look at that monthly chart there and it's taken out this low. So that creates an issue of risk in itself in that you don't know if the low's in.
So he's asking how do you handle this, and the first step is have better buys.
That's a really good point, yep.
It's not about handling it when it drops as much.
It's more about handling his psychology. So for a start, you know, if you're really tested, your psychology is really tested in the market, like Dale said, it means that you're probably trading the wrong stocks. You might even be trading too big a positions for your, for your stomach to be able to handle. And two, you might actually have you need more knowledge, especially with these type of shares that are more volatile. You need a greater understanding of how stocks unfold in a bigger picture sense, not just how do I buy and sell and how do I press a button to enter. That's what I'd really say.
I mean, this is stuff that we've had with our students for the whole time we've been teaching them and we're mentoring, because if we do get a student that this happens to, generally we can find a reason why they have made a mistake in the buy or the stock that they've bought. They've just done something, not necessarily. But if it is a good stock that's happened to, then there's generally a way out of that or how to work, and we help people work through that. That's part of what we do with our students.
Well, I think it's great that he's asking these questions because he wants to learn from it.
He does, but we can't give him all the detail because that would rely on us understanding what he knows and then teaching him a whole lot of stuff, which we're not going to do on this. We just don't have the time. So we can't explain too much because we can't say, well, just get out when it does it or wait for 3 days. Because that's just a broad brushstroke answer, and that would be wrong. All of that would be wrong for us to answer that.
You've got to consider it on a case-by-case basis.
Every stock's different, every situation's different, and the rules around all that you've got to tighten up. And as I said, my guess is you don't have great rules for entry, or your stocks that you're entering aren't good. And I don't think the stock is good.
Well, I'm also suggesting that the big picture analysis may not have been done either.
Yeah, because it's generally a process issue rather than a stock issue, if that makes sense.
Yeah.
And that's really what I'm talking about. But that's it for CCX,
Right,
or do you want
terrific.
to put them on?
No, that's great. Look, our next email is from Tim. Hi, Dale and Janine. I'm a farmer in New South Wales, and although I've been in the market for a few years, mainly holding ETFs, I've recently become eager to educate myself about my personal finances and manage my portfolio more actively. I am part way through Dale's first book and was wondering what your analysis is of D20. I'd be looking at holding medium to long term, and I'm interested to know if you think there's any place for a stock this cheap in a portfolio of someone who is new to investing. As your book makes it clear that the top performing stocks are where capital should be focused. Regards, Tim. Great question.
I just find it interesting that he knows that we talk about top stocks, but then he's giving us a cheap stock. How does that work?
Well, it's probably because he's heard us say at some point that when you buy stocks for a portfolio, you can put a small proportion into stocks that may be slightly higher risk.
I know that, but how many times have you had somebody said, I know, Dale and Janine, you talk about blah, 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 but I did that. And I go,
your
that's
first
great.
port of call is to always buy big quality stocks. And but some people tell me that they get bored with those sort of stocks. Okay, so
making money is boring.
Well, look, they want something that's a little bit more interesting, which is fine. But what you're basically saying is limit that risk to a very small percentage of the overall portfolio, so that it doesn't affect the overall return.
I'd never even heard of D20.
But then what we've said in the past is also with different stocks that some stocks can be quite a lot more volatile than lower cap stocks. So therefore, you have to have a much much greater understanding of the risk management side and the rules and the big picture analysis to be able to trade these things.
This one doesn't look too bad. You know, farmers make awesome traders. You know how many farmers we've taught to trade full time?
Oh, look, we used to have some great fun with some of the farmers at workshops that we used to run.
Oh, yeah, they were trading grains and all sorts of stuff, and they were doing really, really well, and I was helping them with their farming. But let's have a look at D20 anyway before we digress too much.
Yeah, look, I mean, D20 got hit really hard in the COVID pullback, but it was already in a decline overall. Obviously, now you can see that that's the case. So it actually fell. First of all, let's just have a bit of a look at what it's done to get a greater understanding of it. And we can see there that it fell around 40% overall, but that was over a period of about 10 months or thereabouts. And it's recovered and gone through the high that it formed back in 2019. So the trend is actually really nice. The thing that I like about this one from a big picture point of view, even though it trades sideways for quite some time, it looks like a property stock. You know, some of those property stocks, they just hang around and eventually go up, or infrastructure type stocks, which is what it's Duxton Water. So I don't know what it is, but that's what it looks like. It was quite a liquid here at the start, but it looks like it's becoming a bit more
A little bit better, but still not brilliant, but it's a little bit better.
I mean, just coming across the bottom here, just to have a look at what's happening down here at the volume, it's only around 320,000 units a week, which is really a concern because you're right in that bottom end of the barrel of the liquidity. and the stock's only $1.70, so hugely on that low liquidity side of things. So it's a huge gamble for someone who doesn't have proper rules.
Yeah, I'd go for a bigger stock. I mean, he's looking for medium term, which is okay, and so, but you might be just buying. All too often people buy just before a stock falls away.
Yeah.
Because they get interested on that sort of stuff, because it has been up for a long time, hasn't it? It's been up for 18 months to 2 years, this one. So is it reaching its peak and about to fall over? That may be where it is now. I'm not saying it is, but...
Yeah, I think it's all about making sure that you've got the right stock for your portfolio, isn't it?
Yep.
You know.
Totally.
All right.
Is it for me, is it?
Oh, okay. Have we got a caller on the line? Hello, have we got a caller on the line? Welcome to the Australian Stock Market Show. You've got Dale and Janine here. Who have I got on the line, please?
Hi, Dale and Janine. This is Sarjan.
Hello, how are you this evening?
I'm doing good, very good. Thanks for asking.
That's great
hi,
to hear.
Dale and Janine. Yeah, I'm a great fan of you guys.
Oh, thank you very much.
I regularly watch all your shows and got your book as well.
Excellent. And you've got a stock or a sector for us to talk about tonight. What would that be?
Yeah.
What's your question, please?
Yeah, so my question is, what's your overview about the energy sector these days? Because energy sector is looks not looking very good lately. I don't know if it's because some political issues or not, or maybe because inflation is getting better. I don't know. But it looks like energy sector is not performing well in the last maybe a week or two. So I'm particularly concerned about the uranium stocks. So that's what I want to discuss.
Okay, fantastic. Thank you very much for your question. Let's get into that energy sector chart and have a look.
Cool.
Okay.
Are you doing your job there?
No, I don't know where you put the energy sector chart, so I'm not touching the mouse.
Okay,
I'm
you
just
don't know
sitting
the code, do you?
I'm going to sit there, put my feet up and grab a beer and let you do all the work.
Okay, all right. So there's the energy sector, a big picture.
What's the biggest performer this year? So it's done really well this year.
Well, this is dominated by Woodside.
Correct, and it's done so well.
Santos, the biggest stocks in the market. So that sort of, overshadows the whole performance. And, I'd say that he mentioned that that hasn't really done well, but I think that there's this perception at the moment that's the case. But looking at the chart, it doesn't tell you that. It's more about the fact that there's this whole thing with inflation. Everyone's concerned about energy prices, the cost of energy. Some of the companies in the energy space being more regulated because of what had happened with gas. There was concern about AGL and Origin, but I mean, these companies have sort of morphed and changed, haven't they, in terms of what they're...
Yeah, they have. They definitely have. And I mean, obviously, he's talking about specific areas, like we've got...
Uranium he was talking about.
And then there's the other area, which is lithium as well, that people talk about a hell of a lot. And there's a lot of stocks in those areas that are quite small and may not have done very, very well. So that's maybe where his comments are coming from.
Yeah, look, I mean, if I can just bring this up, Paladin is one of the... uranium stocks, which has actually done quite well if you look at that. So it's taken off really nicely. It just looks lovely to me at the moment. So I don't know whether he's looking at a particular stock. He didn't say so.
No, he didn't. That's the thing is, but at the moment it's you got to pick the best stocks within that sector. That's really what you've got to do at the moment. And I still think energy's got a long way to go anyway.
Yeah, me too.
Okay, well, Janine, now it's time we get into our topic for tonight now. Many investors are seeking the biggest mining stocks for their dividends. However, investors are unknowingly buying these mining companies when price is close to a peak or already declining and their risk to capital was highest. Now, last week, we questioned whether buying for a dividend was wise.
We did indeed. And normally your memory's not that good.
I suppose you're also going to say that I don't listen.
Now you mention it, you...
And you can't read maps.
Actually, I can read them upside down or upright. Can we stop all this Mars and Venus stuff and get back to the topic? I think the point that you're making is that in the current climate, nothing's guaranteed. Investors see high yields and assume that's what they'll get. And yes, we chatted about this on last week's show. So if you missed what we shared about dividends, you ought to catch up on some couch time and watch the previous show.
Okay, the other side to all of this is where else are people going to put their money? Now, we know the cash rate has been rising slowly, but is still incredibly low.
Yeah, absolutely. Realistically, who wants to lock their money away to get 2 to 3% when there's a potential turn in the stock market and a possible strong rise in stock prices? I say again, who wants 2 to 3% when there's so much opportunity to do better?
Is there an echo in here? It's like, I know I'm getting caught on, but I'm actually getting really on. But where did we say there's an echo in here and you're repeating what you're saying? So normally when you're old, you repeat what you say.
Yeah. I guess if you were a pensioner and your dividends are fully franked and get 4 to 6% plus franking credits, that could provide you with around 6 to 8% income, and that's nothing to scoff at. But how reliable is that? Let's have a look at a graph to see what's happened in a broader sense.
Okay, now that looks interesting, but what are we actually looking at, Janine?
Well, firstly, we know that yields are not guaranteed to remain high any more than a share price is guaranteed to stay high. This graph, which I found in an article by Shane Oliver from AMP Capital, with data that appears to be from Bloomberg, is interesting because it compares different options for investors looking for income. You can see the blue line is yield from dividends across the broader market, red is bond yields, and then we have term deposits, which are green, and this example is just prior to COVID.
Okay, as expected, dividend yields do fluctuate a lot, but appear far more consistent than the other two options over the longer term. Now, some people may be surprised by that, Janine.
Well, I agree. We know investors are often encouraged to put their money into things they don't understand. So it's important to know how each asset class performs as a whole. You can really see how returns change over time, and we've shown in previous shows how the growth in share prices can change dramatically.
Now, Janine, I remember back to the good old days when you'd just buy a miner just for growth. Now, historically, they didn't pay out much in dividends, or they didn't pay out big dividends at all. Now, these companies just ploughed their profits back into growing their business, acquisitions, etc., etc. And now they bend to this short-term interest of the big institutions and pay money to shareholders just to keep the shareholders interested.
I didn't know your memory was that good, and it's more surprising to me that you remembered than to see these higher yields being paid by miners, of all things, and not banks, which you would expect to be better for income.
Well, so the message is to consider the volatility in the dividend before buying. For example, if BHP was paying a dividend of 80 cents before a price fall, the dividend to be paid in the future may be around the same level, but the yield will have risen with the price fall. Now, when the share turns back up, assuming the payout is around the same, this yield will fall again.
One more point about the yield. The graph shows the blue line as dividend yield including franking, so grossed up to include franking credits, and lots of people don't understand what franking is. Put simply, it means that the company has already paid the tax on that income, so depending on your tax position, you will receive this back. Actually, Dale, the best place our viewers can visit for information on tax matters is the Australian Tax Office website. We've also got some articles on franking on our website in the Learning Centre.
You love giving those little tips, don't you? And I'm sure our viewers love that you also do. But also remember that some companies stopped paying or cut their dividends significantly during the GFC, and they did again in COVID, which came as a bit of a shock for a lot of people. And it was the GFC and COVID when investors actually needed their dividends most, as stock prices plunged 40 to 90% during that time.
Okay, let's get into the charts. I know you've been itching to have a discussion on the miners.
That's not why I've been scratching, Janine. But let's not get into that. Okay, this looks like the historical share price for BHP over the decade. So do you want to walk us through that pretty graph?
Right, you are. Dale, no surprises here. The top part is the share price, and below that are historical dividend yields in percentages. So what does all that stuff at the bottom of your graph show? Essentially, it shows how the amount BHP's dividend yield rises and falls at really important times. Now, the graph in green steps up and down, and I've traced over it with a dark line to emphasise the direction. BHP's dividend yields rose from the year 2012 to 2015, and this occurred while the share price was partway through a long-term decline, which is logical. Yields can rise when prices fall, and of course dividend amounts paid may fall or rise depending on the company's policy from year to year. But you can see the yield dropped in 2016 when BHP cut its dividend, as you mentioned earlier, and note this occurred at around the low in the share price. And you can see on the graph that BHP lifted the dividend again sometime after the low in the share price, remembering that news of higher dividends helps fuel the rise. And this graph also indicates yields were largely stagnant for a few years prior to recent market volatility, even though the share price rose. So as the share price rose, overall dividends were rising, but essentially the biggest rises in the dividend amount paid have occurred around the time of the peak in 2021, and another big one will be paid in September. Right now, investors are seeing an 11% yield for BHP, but based on history, and we do not have enough history going back to 2010 and 2011 on this particular graph. However, I recall BHP was supporting its share price with a number of corporate actions around the time of the mining peak in 2011 and as the share price fell.
Okay, so based on everything we know, the current yield is unlikely to be sustained during the initial fall and could be cut significantly unless the share price was to recover strongly now and much quicker than a lot of people expect.
Right, and this is what I am watching for. I've drawn in vertical green lines to show where the yields had the most dramatic changes, and the red solid line shows where the cut occurred in 2016. The red dashed line where you would expect to see a change. So currently this indicates a change may occur in 2023. We're heading to the zone for the next cut. And this is why the takeover of Oz Minerals would have really helped BHP, but that is another story, perhaps another topic if our viewers tell us that they're interested.
Well, I hope they are. Now, I'm sure they will now. Traditionally, investors look to the big banks for dividends, Janine.
Yes, but even they cut dividends in the GFC and COVID. Westpac and ANZ suspended their half-year dividends, and I cannot recall if the others followed.
Okay. So investors must understand there is a potential dividends could be cut, so don't bank on them, pun. On the plus side, the stock price could fall a lot less than a worst case scenario, so perhaps now you had better clarify for our viewers what you mean by the potential falls that could occur in the big miners. So let's get in the chart, hey?
Let's go, yeah. Okay, so on the screen there, let's just expand that top part up now to have a good look at the price side of things. So what we're thinking, now BHP, as we know, is actually trading below its all-time high prior to the GFC, which was in 2008. So it's all the way back below that level, which we've always said to us, that's quite astonishing to see BHP back at those sort of levels. But, you know, I haven't done this sort of analysis, but I wonder, like, the amount of money, if, you know, during all of these declines that these companies are handing back and how that actually affects things going forward. You know, it's something I'd not put a lot of time and energy into in terms of the growth that then follows after that. But
yeah, but it's interesting because of the as you mentioned, they're under a lot of pressure from the big end of town to pay dividends and return capital to shareholders if they've got spare cash, whereas Buffett would give them the big finger.
Yeah.
Like Berkshire Hathaway has never paid a dividend and he's constantly said he never will. And it's about proper management of the company and they should leave it to the directors to do that. We're running the company, not, you know, the fund managers. And just because you want a dividend doesn't mean we have to pay it. Because BHP might have more money to go and do bigger acquisitions, become a better company, which is what they used to do. And a lot of companies used to do that back in the day, as I remember. You know, it's like, I never ever bought BHP.
I thought you were going to poke yourself in the eye for a minute there, but I'm glad you didn't.
Well, I was, and, you know, but again, it's like, let the companies do what they do best. BHP is one of the best companies in the world. Let it do what it does. You know, just because it's not paying a high dividend yield doesn't mean you should put pressure on it.
So go BHP, you think?
Go BHP. And Rio.
All right, so now let's just have a look at the declines. We're starting to see the miners find some support, but we still don't know whether the current decline is over yet, and it's too early to tell. We were looking at BHP from the point of view of what are the potential scenarios that could unfold in its share price, and we'd expected that at a best case scenario, its share price might come down somewhere around this level here, which is around that $35, $36 mark. So from its current price, it could flip back and then head down, just not much lower than this low here.
We think the pendulum of probability is into the I'm going to fall a little bit further.
Well, that's what you think, but it's just turned around and it's looking really strong. So we just have to let the chart tell us, and this is why, you know, over the years you learn to do that rather than falling in love with your own prediction.
Oh, yeah.
So now we can see So that's what happens, isn't it? When you first learn technical analysis, you start to fall in love with your own prediction until
and you think
realise
it has to. It's like, why didn't it do that? And I don't know how many times somebody said to me, like, why didn't it do that? And I go, does it have to?
No.
And they go, what do you mean? I go, does it have to do what you think it's going to do? They go, no. I said, well, then why are you making it have to do that?
Yeah, exactly.
It's just probabilities. It's either going to go up or down, and we have rules for both. So,
that's right.
Yeah.
So
suck it up, princess, is what I say.
Well, I don't think that'd be appropriate.
Why not?
Let's get into the charts.
Okay.
So you can see here that from the current price, we could see a decline to 22%, which would be somewhere around that $30 mark. And, that'd be awesome if BHP, I know that some people holding the stock might not think so, but it would be really awesome if BHP were to come back to around those sort of
I'd
levels.
love it.
We get a baseline under it, and then it's got some momentum, because, this is significant resistance near this high now that it's created. So, but the worst case scenario would be a 30% decline if a lot more was going on our stock market overall. That would involve, there were questions earlier in some of the emails that came through about the implications with China. We could talk till the cows come home about what could happen, and we may get it wrong.
Yes.
Because anything could happen right now. But if the worst case scenario was to unfold, then we could see a 30%, further 30% fall. So that would take the overall fall, let's have a look if it did that, to around 40 odd percent, which is a normal decline on the market.
Yeah, that's a normal decline for BHP anyways.
Yep. All right, now that's BHP. We've already talked about the dividend side of things. So let's just go into a little chart of Rio that we've got here. So this is the monthly chart as well.
A little chart of Rio.
It's a little chart because I've squashed it up. Okay, so we're not looking at the whole history of Rio, obviously, because we don't have data going back for these dividend yields, but we can see a similar sort of thing that happened with BHP. We saw the initial rise of the dividend yield that happened up into 2015 and a swift drop in 2016. So this is only one of the dividends that was paid in 2015. Often in a year they'll be, the same sort of level.
Yeah, they do.
So if we see $1.50, the other dividend may have been $1.45 or somewhere around that. And then in September 16, we saw it drop to 60 cents. But it didn't stay there long. Off the dividends went again, obviously, and we started seeing growth in those dividends. So through 2017, 2020, as the share price is moving up, we're seeing really good growth. But then we see this $7.60. So sometimes you can get these bonus dividends where they have, corporate actions going on there and you get special dividends. But in this case, there was a $7.60 dividend September 2021, but look what it is now.
Yeah, $3.84.
This is the forecast one that was, I think, $3.84, yep. But the share price has fallen away and the dividend's dropping, and this is typically what we'd expect. So if I hadn't seen that September 22 dividend, BHP I don't think has released its yet, but it could be wrong. But you can see that there's a red dashed line there that I'd marked on the chart, expecting a fall. But we've already seen it, haven't we? So those yields, they're staying high, but the share price is falling. So if we start to see the share price rise again, obviously those yields are going to drop away, and that's, I guess, what I'd expect. But so the chart's sort of telling me that we could see a rise in the share price at this point, but then I can't bank on it because the analysis is telling me that we've still got, a fall through that low to come. So there's a bit of a conflicting information between what's happening with yields out there and what's happening with the share price at the moment. But
well, I think investors need to be not worried, but just a little bit cautious over the next few weeks, because I know a lot of companies are paying dividends over the next 3 weeks. There's a lot of money. I mean, I've got dividends, been advised of dividends already coming through. So, I mean, you're going to see some drops in some of the shares with their dividend yields.
Yeah, I guess the point is not the exact amount of the dividend, it's the fact of how the dividends change over time. Yeah. The share price is obviously going to change, so the yields change over time, and we can see the graph underneath is showing the change in yields going higher and a step up. And it's really quite significant there in 2021, staying high, but now we're more likely to see it drop off.
Cool.
If it rises and does something completely the opposite, then I'm going to be so intrigued, and we'll have to come back to this at some point to talk about it. But just one more thing.
One more thing. On
the chart there, you can see I've got around 26% fall from the current share price. That would be, at the moment, my worst case scenario. If Rio was to fall away, I'd be expecting still the potential for it to find support and then turn long-term bullish again.
Okay.
All right, so we've got FMG. Now, we get lots of questions about FMG, so
do.
I thought it was appropriate because lots of questions come in about the big miners.
They do.
And typically people will be holding at least one, if not two, of the big miners at some point when they're running their portfolio. So it's about, do you hold on to these sorts of stocks for dividends? Now, I haven't put the individual dividends here, but I just wanted to illustrate the same thing that was going on. So you can see that when there are rises and falls in a stock yield in a sector, often it's going to happen to the other big stocks in the same space. So BHP and Rio were almost, and even though the amounts would have been different, the timing of when those changes occurred was very similar. Okay, so that's something to keep an eye on.
Because obviously we would expect FMG to fall away with BHP and Rio.
We would, and it already has started to come back. So we've seen a drop in the dividend for FMG, and the dividend itself that's coming. I'm not sure if it may have already paid it, actually. It might have been August when it paid it. I just can't remember off the top of my head.
That says August, yep.
But it says, our analysis had said that it would come back, and it looks like it's actually making that step down. If the share price falls, obviously the yield's going to kick back up again. So we could see that happen, but the worst case scenario I'm expecting for FMG would be a 44% fall from the current price. I'd be happy to see it fall 28% to complete the current move, and then we'd be setting up for the next rise. But if we get a solid run about above $22, then we know FMG is going to challenge the all-time high. So we're always looking at that downside, as you know, and then looking at, well, where's the line in the sand? If it trades above this level, then we think it's going up.
Okay.
So look, I had put, I had originally had 3 stocks. Normally I'm this 5 or 6 stock girl.
I know, so you've got room for one more stock.
Because I just didn't think I'd fit it in.
Have you got another stock?
So I put Woodside Energy in there as well because it's a big mining stock. But I thought what was really interesting about this, and I don't know if you can remember back to when this, but I specifically remember when this stock was trading in 2014-15, there was a huge jump in the yield on this stock. And then the yield just plummeted back down again, but it flatlined. So it's sort of opposite. I just think this data's got a bit of a gap in it. I wasn't, convinced that that's correct. When I looked at it, but I was more interested in what happened through here. So we had a slightly rising share price going through here, a big jump in the yield, and then it fell away again. So this one's less conclusive to me at the moment, but I can see that we're starting to see.
But it looks like a better stock to own than the other 3 at the moment.
Yeah, that's right, but yields are still high on a lot of these stocks, which is quite incredible and not normal industry.
The thing is, just in summary, it's, to me, it's like at the moment there will be opportunities for BHP, Rio, FMG, not now but down the track.
Yeah.
I've never bought a miner for the dividend yield, and probably something I never will.
I know, and I'd like to see the market return to where the miners are actually paying less than the market average, but the growth in the share price is there.
That's what I want. I'd rather the growth.
I think that's where we're heading.
Because BHP hasn't had the spectacular growth that it used to have, so that's what I'm looking for anyway.
Yeah.
But that's it we've got for our topic tonight. Now, before we get into our next email, giving you at this point in the show and still watching it, probably means that you like what we're doing, so make sure you hit the like button now. So give us a big thumbs up. It's just below there. Janine and I are going to sit here until you do it. Great, you've done it all. That's really how all you have to pay to watch this show is give us a big like every single week. Now, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to call is 03 for Melbourne 9290 9988. That's 03 9290 9988. So pick up your phone and get dialing right now.
While you call us, we will get into answering the next question, so call now.
Our next email is from Dale. I sent an email in, okay. Cool. He says, hi, Janine and Dale, just starting to get back into the swing of things and spotted this stock a few weeks back. Too late for an entry, but would really appreciate your expert opinion on Pilbara Minerals. Looks to be in a nice upward trend at the moment. Kind regards, Dale.
All right.
Must be a good trader too.
Well, look, that looks just lovely, doesn't it?
It does. Looks awesome, doesn't it?
Yeah. So, look, I would say that it's bullish, and while it remains bullish, if we were trading this one, we'd stay with it, wouldn't we?
Yeah. It's going really, really vertical at the moment, so I wouldn't be getting into it now. I think it's really run its race, as he was saying. Really run its race.
I mean, when a stock runs like this, though, it's always got its potential to keep going, though, doesn't it?
Yeah, but for how long?
Well,
and do you want to take that risk? You know, because how long? Everything's going to come down eventually.
Well, you'd have to have a really good stop on it.
Well, you would. And how many weeks has this thing been going up? So you'd have to have, and where would you put your stop on? This was something that's gone up since June. It's pretty much just gone other 1 week down, and it's just gone straight up from there. So, you know, you got to think that it's got to take a breather sometime soon, because people they still remember that it was like $2.50 back here at the end of July. So they'll be going, I'll wait for it to come back before I buy it. So the buying will slow down, and then that will slow its momentum down, and then it'll come back off again. So I probably wouldn't be getting into it right now, but great looking stock, isn't it?
Fantastic. Now we have a question from Walter. Hi, Janine and Dale. Can you please give your thoughts for NextDC? The company has released the financial year 2022 results, which was one of the best reports in the last 4 years, with a revenue of $292 million and a net profit of $9 million. There's been a lot of indecision in the past 2 years, with the company's share price going from $10 to $14. Do you think this stock will go for a new all-time high in the near future? I don't own the stock, but I'm watching it very closely at the moment. Regards, Walter.
This is one of those stocks in the COVID thing that people just bought, thinking everybody would be putting everything into the cloud and
all the tech stocks,
all the tech stuff and everything else, and it sort of made sense that, you know, the data centres were going to take on a lot of business, but didn't really work that way, because pretty much most people are in the cloud already.
Well, it looks bearish now.
And it looks
short term, it could rise up a little bit, but it needs to get through that $12 mark to take off again.
It does. So if it's making these great profits and everything, why is it falling?
That's right.
Maybe it was overpriced after that big run up into the COVID high, and then what's been happening is
Well, it's always that the companies come out with great reports. It's already been factored into the share price, and the forecast may not be as great potentially. I haven't heard what their forecast is, but if the forecast doesn't impress the market, it gets sold off. It can also get affected by the sector influence as well. So we don't know how much that's playing into it at the moment, but it's trying to push back up. But, you know, those sort of patterns that you see on a chart aren't always bullish.
No, that looks very bearish to me. And that's the thing that people quite don't understand. They see these really good fundamental reports coming out and going, it's got all this happening, but the price still keeps falling away.
So it must be cheap.
So it must be cheap. Well, it's not really at the moment, because often you see those reports coming out and the stock is still falling in price, but it just means to watch.
Yes.
Because if it does start to find some support, then it might start to go up. But could be 6 or 12 months before we do that. But we do have a caller on the line, Janine. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Hi, it's Matthew speaking.
Hi, Matthew. Welcome to the show. Do you ever got a question for us, mate?
I do. I was just interested in your opinion of the chart of Mondelez, MND. I bought it early this year for about $9.50. I'm just wondering, your opinion of the chart and how healthy it's looking at the moment.
Okay, is it a medium, short-term, long-term trade for you?
Probably medium.
Medium term. Why did you buy it?
I like the look of the chart. I had a preset buy zone, and it hit that, and it came off a low at about 9, or just under 9. So I let it jump up a little bit there, and then I bought.
Okay, do you have an exit strategy on it?
So I probably have about 8% buffer once it hits around 15.50.
Okay, cool. Well, Janine's got it all up, so do you want to have a look at it? Thank you, Matthew.
What's interesting, though, is it's been largely sideways longer term, hasn't it? If we look at the chart there, we can see that. And it's quite volatile. Look at the big fall that we saw during COVID, and then the bounces up and down. But he may be right. I mean, it started to recover out of recent lows, and it's trading up around $14 now. So on the upside, well, look, I guess it's, it's hard to say. It looks like it should keep going to about 16, but what do you think?
Yeah, it's one of those ones that it is, because it is so choppy at the moment, isn't it? So you've got to have some really good rules on that stock to be able to capture it. But if it goes to 16, is it going to go higher than that? That's the question. But it has gone quite vertical, so you probably expect it to come down for a few weeks anyway soon.
Yeah, and look, I still would be, I wouldn't be, too quick to think that it's all the problems that were happening through here are completely over either, just because of the personality of this stock when it gets sold off.
Yeah, it's more of a trading stock. It's not. I wouldn't necessarily call it right now as a medium-term trading stock top sort of buy medium-term. And medium-term for us is like 18 months-ish. So I would think this is a little bit more of a shorter-term trading stock.
Months, you mean?
Up to 18 months, yeah. So I think it'd be a bit more shorter-term at the moment. But I think he's done a really good job at the moment.
Okay, terrific.
Cool. All right, our next email is from Chris, who says, hello, Dale and Janine. Thanks so much for your show. I have read both of Dale's books and seriously wish I had done that before I invested. I've been stuck in a very bad trade for a while now, losing up to 60% of my capital and finally broke even today. Well done. I was not able to trade any stocks for a long time, but did use that opportunity to learn from all the nuggets of wisdom that you two have provided weekly on the show. It has encouraged me to give serious thought about doing your course to gain a proper education in the near future. I would love to get your thoughts on S32. I do not own the stock, but would like to buy for the short to medium term. Two things I'd say to Chris.
What's that?
Stop thinking and just do the course. And I like S32.
Yes, you do.
And sorry, the third thing was everybody has done something like he's done, has bought the stock, a wrong stock at the wrong time and held on, and it's been a really good reminder not to do that dumb thing again.
Exactly. At least he's honest about it.
S32, your opinion on that? I know you like this stock.
I do like this stock. I mean, the good thing about it is it's above that high that occurred back in October 2018. It has had a significant pullback. Now, it could come up to around 460, 480 in the short term, but still not completely clear as to whether it could pull back from there at the moment.
I'm surprised it bounced so hard off that low. It really did. It really pulled back very, very heavily down into that low, into this sort of area here.
Because you've got no trend line down into that low. Yeah. The trend line's up high, isn't it?
So we're talking about, it's a pretty decent fall from that high all the way down to there, 37%. So I would have thought it was only going to come up for a couple of weeks and then fall away and come down a little bit further again. But it surprised me and looking better right at the moment. So I've been looking at it for the last week or so going, So I'm there. I'm in the, that's interesting phase at the moment. Not in the, I'm excited, I'm going to buy phase yet.
Oh, okay, very good.
But it does look interesting to me. So good pick. But again, stop thinking, just do the course. Really, you'll love it.
Awesome. Look, we've got another caller on the line. Gee, the lines are running hot tonight. Welcome to the Australian Stock Market Show. You have Dale and Janine on the line. Who have we got there, please?
You've got John.
John, how are you this evening?
I'm very well, thank you. How are you?
Fantastic. Thank you very much. And you have a question for us tonight.
Yes, actually I've got two questions, and it's in regards to silver.
Yes.
I'm interested in investing in silver, and my questions are, firstly, would yourself and Dale be buying silver at this time? And my second question is, if you were to buy silver, would you buy stocks, physical silver, or would you buy something like unallocated silver?
Great question, John. All right, thank you very much for that question. We'll get into the charts and have a look at that. Did you want to bring up silver, or did you?
I can't. I completely blank on the code for silver, so that's why I didn't bring it up.
That's okay.
But probably to answer John's question, because you've got to look at whether you buy the physical. I don't think I'd buy the physical. Because then you've got storage and insurances and stuff like that. And I know there's places that do that for you, like the Perth Mint and other places that will buy physical silver and store it for you. So it is a good way of doing it. You can buy stocks that obviously do mine the silver to get exposure. But to me, I'm even leaning, and please don't fall off your chair, I'm sort of leaning towards getting an ETF towards silver.
Look, we've actually done a show on silver. So if you look up on our YouTube channel and look at the history of the videos, you'll find one there. I can't remember when it was that we did that, unfortunately, but if you look at the chart that I've got up on the screen there, you can see I've got the monthly chart of the silver futures there, and at the moment we're seeing a pullback in the price. So we've seen a pullback in gold as well. Now, normally the pullback in silver or the moves in silver tend to be more volatile than gold. but it looks like it might be coming off the bottom there, but it's a little bit too early to tell. And look, if I was picking silver stocks or silver, I want to see a move up, decent move up, and some good solid rules to confirm that it's actually made a bottom, because it may, when those commodities fall, they can continue to fall. You just think they're going to find support, and they can surprise you and break through the support levels sometimes.
Yeah, I mean, we've talked about them being, gold and silver and that being safe havens, and we sort of dispelled that a little bit.
Well, we tried to. What we said on the show when we ran this topic was about picking a stock that actually replicated the index. If you're going for gold, you're going for silver. I think we talked about gold on the show as well. Pick one that actually looks more like the index, so there's no sort of surprises there.
Yeah. All right. Any more on silver?
No, I think that's it for now. Thanks very much for your question, John. Now we've got a question from Hazel, another lady, which is great. Hi, Dale and Janine. I've been watching ALL and practicing trend lines, and although it has gone up by small increments on the monthly chart, it seems to me that ALL has signalled an entry point. The weekly chart seems to agree. Am I reading this correctly? I would appreciate your guidance and thoughts. Thank you, Hazel. So thank you so much, Hazel, for that question. Let's get a look into
Short
the
answer,
charts.
no.
Short answer, no.
Long answer, I'm sure you're going to give one. I can't see a buy there at all. I understand it's going up a little bit, but there's no buy there for me at all.
Yeah, look, I mean, I can see that there was a buy there depending on what rules were used. I just thought that perhaps it might have been a little bit early because you still don't know whether it's going sideways and you don't really know whether it's going to turn and move back up. It's had 3 bars down over the last, 3 weeks have been down. There was 1 week up here. That's not a sign of strength. So I'd really want to see this stock start moving back up again before, I said it's more likely to rise. That's my view at the moment. So I'm agreeing with you. You did say I was going to give you the long version.
Should I fall off my chair now? You're agreeing with me? God, jeez. Thank you. But I do like this stock, and it's just worth sitting back and waiting, I think. And I think in the next few months you might get a better picture from it. But right now at the moment, the risk is a bit too high to get into it. But we do have another email. And this one is from Tom, who says, Hi, Dale and Janine. I've recently started watching your show and love your work. It has helped me to understand trends better and what the market is doing. Would you be able to look into KCN or Kingsgate? It seems to be trading within a range with a small ascending triangle. Is the chart showing a buy signal? Kind regards, Tom. Interesting what he's saying, and I don't see.
Do you see a buy signal there?
No.
No, neither do I.
Do you want me to give you the long answer? No.
All right. So look, I think
one.
it looks interesting how it's consolidating there. If it fell, look, the bottom line is if it fell back below there, I'd be a bit concerned about whether it could take out this low as part of that move. Yep. But in the short term, it may move up to challenge this high here and move up. There's a fair bit of resistance there right now, which will be holding it back.
So you're saying, like me, you don't agree with his analysis?
I'm not saying I don't agree with him. I'm just saying at the moment, I'm saying, I can't see an entry there yet. No. But I'm just looking at this now and saying, well, if it rises, we really want to see it get through that high there. It could then push up to challenge that high. But the risk is that it might take out the low on week ending 26th of August 2022. And if it does that, I wouldn't be, holding out for it.
Look at the volume. This is just something I've noticed. Look at the volume. And look at what's happened over here and look at what the volume's doing. It's not showing there's a lot of strength there, is it?
No, it isn't. So somebody's sold off a lot. Somebody's bought it then, because there has to be someone on the other side.
Well, you never know what's going on at the moment, but I'm not super bullish. I mean, it could go up, and I'm with you, it could go up, but right now it's not super exciting to me anyway. But that's it for KCN, yes?
All right, now we have a question from AK. Hi, Dale and Janine. Awesome show and a fan of you both. Could you please review CXO and provide your thoughts? I do not hold this stock, but I was wanting to get in. Appreciate your thoughts, AK. All right, Core Lithium. We looked at those lithium stocks some time ago, and this one does look really interesting, doesn't it? The fact that it's pushed up to challenge that high is just fantastic. So great. I'm liking it at the moment. If it manages to break through.
He hasn't said whether he's in it, does he?
No. So look, at the moment it's just looking really nice and might break through that high there, but a move below that low there and I'd be, thinking it's turning the other way. But that looks strong.
Be really, really careful, and I was explaining this on another stock yesterday with the marketplace, because sometimes when you see stocks up around that all-time high, what you see is there's a lot of people waiting to buy when it breaks through there, and you get institutions or broking houses push it through to suck up all that buying. And so they suck up all that buying and it pushes through, the buying happens, and then all of a sudden it just drops away again as they all sell back into that volume coming through. So just be real careful at the moment. I'm not saying it's not going to do that, or is definitely going to do that. I'm not saying it's not going to break through it.
That's a really good point.
It does look really, really good to me, but I see it so often, and I showed an example on yesterday's market report. So if you haven't watched yesterday's market report, somebody asked me a question and I explained what happened around an all-time high on this stock.
Okay.
So go and have a watch of that. But anything else you want to say on CXO?
No, have we got any more time to do more?
We've got lots of time, but not today.
Oh, no.
So we have all the time in the world.
I had an email printed out just in case we were able to fit that one in.
I'm sorry.
It came in a bit late.
You know I hate disappointing you, but I'm going to disappoint you.
Oh, no.
Okay, good. Because that is our thoughts on CXO. Now, I did want to thank everyone who's taken the time to comment in the YouTube comments, or has taken the time to email us. We really do appreciate your feedback.
You've been asking us questions, and each week we ask you for your thoughts. Last week we asked, if you were to sell one stock in your portfolio, what would it be and why? Donna R said, "Hi, thanks again for an informative show. The share in my portfolio that I would really like to sell is GSN. I bought this on FOMO at about 18 cents and watched it fall to just over 3 cents. I don't have a lot in it and make myself keep it as a reminder of what not to do. You're not alone. There are as many who have bought on FOMO."
Yeah, a lot of people buy on FOMO and do exactly the same thing, so we absolutely know what you're talking about. But thank you for sharing, and thanks to everyone who joined in and commented last week on our YouTube comments. We really do enjoy reading your comments after the show, so please keep them coming.
This week's question is, what is the long-term goal of your portfolio? In other words, what is the purpose of your portfolio? And if you achieve your goal, how would it change your life?
Good question.
So come on, everyone. This is your opportunity to be heard. Join in and get typing. Please write your answer below this video in the comments section. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're using.
Now, if you've enjoyed tonight's show, give the team a really big thumbs up to tell them you enjoyed the show. That means click the like button below with the big thumb on it underneath the video to let us know that you've actually enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you are not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line.
We really appreciate your support, and you can show yours by subscribing to our channel right now and hitting that subscribe button.
Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We've so enjoyed receiving all your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we hope you have a great week. But for now, goodbye, good luck, and good trading.
Bye for now.